Hi everyone, Adam Harris here. It is the 15th of November 2020, and just starting off by looking at the currencies, looking specifically at the US dollar index. And the weekly is very telling here. Principally, price has been largely range bound, heading down towards 92, bit of a rejection off that level. If I look at the daily, we don't really have a clear trend. We are struggling with 93. So overall, no clear trend. The monthly looks a little bit more bearish than bullish and is heading potentially down towards 90. The issue is there is really no clear direction here. It is struggling with 93 and it could potentially then head lower. By looking at euro dollar, this has done the same thing. It's a sort of inverse correlation, has found some support off 1.175 and is potentially going to take another run up towards 1.19. That weekly chart is also very, very much range bound, and the monthly as well produced a slightly higher swing low at the moment. So there's just a lean towards a slightly weaker US dollar and a slightly stronger euro, but at the same time, it's very obvious that the market itself, that there aren't really a lot of clear trends at the moment. Looking here at sterling, sterling is doing some quite deep retracements, but has pulled back, produced a nice bullish candle here, and it is doing that off some previous highs. That'll most likely be off a Fibonacci level as well, so the implication here being that this is going to attempt to continue on higher, certainly over the next couple of days towards 1.34. And if it could just make it past this most recent high, then we're looking at a weaker US dollar, stronger cable, and the monthly as well producing that swing low and heading up towards that next key monthly resistance level at 1.35. So supporting the idea of a weaker US dollar as well. Having a look at Australian dollar versus the US dollar, this is very crisp in terms of its behavior. A break above monthly resistance, come back, retest it, nice little bullish candle there as well as a swing low. Implication here as well being that it is going to attempt to continue higher. You can see on the daily here some very strong rejection at 0.73, and yet similar to sterling as well as the euro dollar, it's pulled back and produced a bullish candle on Friday. So what I'm going to be looking for this week is a continuation of that, but it really is going to have to break through and above these recent highs. And that's going to have to happen across on all of those. Then looking here at Kiwi dollar. So Kiwi, the New Zealand dollar, to me is the most interesting so far out of all the charts. It's the one that has at least openly broken and gone up to new highs. It's also produced a nice little bullish candle here. It is just below that weekly resistance. I'd like to see it get back over that, but of course it's very likely to do that if the others do that as well. So a much weaker US dollar will get it back over that level, and if that is the case, then it's going to start, or it is likely then to continue onwards up towards 0.75. Having a look at dollar yen. So what I spoke about last week, we had a very strong reaction and a rejection of those historic lows, those monthly lows. But it is still possible, the potential here, prices then come back down towards this level. So I would like to see it break below that level, continue lower, and then potentially continue its slide down towards 101. Doesn't really have to do that. It's very possible. I've seen it happen over the years. I've seen dollar yen stay range bound and just do its own thing separate from all the other pairs. But in this particular case, I'd really like to see that happen. The flow of it is much more bearish than bullish. I'd like to see if we can continue down. And again, that will support a weaker US dollar. Dollar Swissy actually was looking to me to be particularly bullish on Thursday. We have a really nice bearish candle followed by, at the time, it was an equally bullish candle. And combined, that would indicate a very strong rejection of 0.9. Also with some potential for bullish divergence on the momentum indicators would imply that we might actually see a stronger US dollar and a weaker Swissy. So that is very interesting to me. I'm going to keep an eye on that. What I'd need in order to see that happen is really to see over the next few days, see price come up, change into an uptrend, break the previous high, and also break up above this recent high on the 2nd of November. So in other words, get outside of this range and start to push up on that. Now that would be a combination of the Swiss franc weakening as well as the US dollar strengthening. So interesting to see that happen. That is showing some potential for a potentially on a different outcome, but that monthly, of course, is still looking quite weak. So alternatively, if it falls in line with the rest of the pairs, it will just come back down to this 0.9 level and potentially finish even below that. Looking at dollar CAD. Dollar CAD has also dipped a little bit lower on that monthly candle, so this is looking slightly weaker. It's broken the lows there at 1.3, and it's got a downtrend on the weekly, so that is certainly also supporting the idea of a weaker US dollar. Looking at it on the daily, a nice little bearish indecision candle here could see price, especially if we follow through, heading down. So all of these are, at least on the face of it, are set up to support the idea of a weaker US dollar and look as though they may actually continue in the prevailing trends this week. Of course, it isn't set in stone, but that is how they have set up. And I do find that is how I'm going to be positioning myself, at least in the start of the weekend. At the start of the week, and then to see how it subsequently unfolds. But that is all happening within a largely range-bound market. I worked through all of the pairs, didn't see anything that appealed to me other than when I get to the Kiwi pairs. So Kiwi CAD, for example, I want to highlight that it has, in this particular case, has actually broken up outside, created fresh highs on its weekly and monthly timeframes. Kiwi Swissy has also now broken outside of a long sort of held range as well. Like to see that. So that's broken up. It's now got a confirmed, if messy, trend on the monthly side. And Kiwi Yen as well has broken outside of this very tightly held range for a while on the weekly and monthly and pulling back down. So there might be a potential swing trade long on this side. So Kiwi, believe it or not, Kiwi CAD, Kiwi Swissy, Kiwi Yen, as well as just Kiwi dollar, so far is the only chart that is showing any significant shift outside of range-like behavior. And so that is at the top of my list in addition to anticipating a weaker US dollar. And that's it from me. Thank you very much. Have a good week.